All right, let's do the much requested clip on renting versus buying. I've gotten a ton of emails on this one. This is one that's become increasingly controversial with people on both sides saying, obviously, it's better financially to own, or others saying, obviously, it's better to rent. None of the responsibility. You can invest the difference if such a difference exists, et cetera, et cetera. The truth is that, like with many of these things, come on, guys, you know how this works. Whether it makes more sense to rent or buy depends on your lifestyle, your financial situation, your geographic location, and your goals and priorities and what you're trying to do, as well as potentially your age or sort of like where you are in your career. Both will require a stream of money regardless. Even if you own your home outright with no mortgage, you still have real estate taxes, insurance, utilities, maintenance, et cetera, et cetera. So let's start with the advantages to renting. Let's start there. One of the advantages to renting is, how do I want to put this? We could call it more maybe predictable, and maybe we would even say steady cost. Now, this isn't always the case. Rent tends to go up over time. Utilities can fluctuate significantly. Even if there are changes to the cost of the ownership of the home that don't affect you as the tenant, the landlord may pass them on to you, but you don't have to worry directly about fluctuations to real estate taxes or a mortgage that's an adjustable rate, which is going to adjust up, or the boiler needs to be fixed or whatever. But it's important to remember that to some degree, many of these costs do get passed on to you by the landlord in terms of rent. We can also say more flexible in terms of mobility. If you have a 1-year lease, you can just leave at the end of that lease, period. You don't have a home that you have to sell and all of the work that goes along with it. If you have a month-to-month lease, then it's even more flexible. If you have no lease at all, although I think typically you would have it at least month to month, you also have the possibility, if you need another year, to just extend for a year or to convert a yearly lease to month and to stay longer as well. Where with a home, you own it, and if you're going to sell it, it's a big project. And once it's sold, backing out of the sale can have financial consequences. Also for rent, we can kind of say, I guess we would call it a lower barrier to entry, maybe we would say, in the sense that usually to get in on a rental, you need some combination of first, last, and security deposit. Whereas when you want to buy a home, and we might put this up here in terms of, entry, you're talking about down payment. If you've got a mortgage, what we call our mortgage origination fees, appraisal, which can include that can be included. There's all these different things that you have to pay for. Generally speaking, in terms of dollars, it's way cheaper to start renting. Another advantage to renting, we could call it no concern about home value, I guess we could say. You could own a home and it could actually go down in value. And when you go to sell it, it's actually worth less than when you bought it. That can happen. You don't have to worry about the timing. You need housing now, you rent a place. The timing of whether the real estate market is up or down doesn't really affect you. We could also call this just like lower, cheaper insurance. So renters insurance policies are very cheap. Sometimes, it's like under $200 for the year. Homeowners insurance policies go anywhere from $1,000 to $2,000. And then the other thing is, there's this concept that sometimes people say you're throwing your money away when you rent. You're just throwing it away. You're not getting anything for it. Two things on that. And I say this as a real estate investor and homeowner. You still have costs that are not recovered when you own. You don't recover your insurance costs. You don't recover your real estate taxes. You don't recover the interest that you pay as part of your mortgage, et cetera, et cetera. So I think that's something that often is said, which is not totally accurate. but you get a place to live. You get a place to live, and that has value where you're not throwing the money away. It's sort of like saying, well, I rented a car when I went on vacation, and then I didn't own the car at the end of it. No, but it provided transportation while you had it. That's what you paid for. Well, the rent provided a place to live while you lived there. So that's an important thing. And then sometimes one of the advantages of rent, this depends on where you live, but there can be rent control where the amount that your rent can go up can be limited. Maybe it's like 3% or whatever the case may be. Okay, so these are the main advantages to renting. What about owning? Well, when the property appreciates in value, you have equity you build plus capital growth, right? So with every payment that you make, you may have $1,000 mortgage payment, and there's an amortization schedule, and the amount that you pay increasingly goes towards principal over time. So at the very beginning of your mortgage, out of your $1,000, maybe $80 is going to principal and $920 is going to interest. But over time, that will change, and then it's $81 and $919. All of these little hits buy you a little bit more of the equity in the home, which you then own. This, by the way, these numbers in a 30-year, it might start like this. I'm kind of making these up. But then after a few years, more and more of the money is going to principal, and that is a good thing. In general, you have capital growth. Now, I do think it's important to say that the average return on home ownership is certainly lower than many people assume, because I think to get the real return on home ownership, you have to subtract out things like real estate taxes and other costs that you don't get back. We talked about this in the rent section. You also, when you own, you have more control. So you have control over, is there or is there not smoking in the home or in the structure? Well, it's basically just up to you. You have more control over if you want to put up a fence, if you want to have pets. You make the rules, assuming we're talking about single family homes. If you're talking about a condo, you make the rules along with your fellow condo owners. You can also make the case that you have more stability. Now, what do I mean by stability? Well, we know that homeowners tend to move less than renters. Now, you could say, well, but David, that's not a question of stability. It's that a property is very illiquid. It takes a while to sell, so it's much more difficult. It could be a combination of both. But on average, you could say, for whatever the reason, people's housing is generally more stable when they own. And you can also improve your credit, because when you have a mortgage, it is a revolving line of credit, the way we've talked about before. I'm sorry, not a revolving. It's a fixed line of credit, an installment loan, and you are improving your credit as well. There are also tax advantages, which are important to note. Your real estate taxes and mortgage interest are tax deductible. In the first years of your mortgage, as I pointed out here, the majority of your payment is going to interest. And so you can deduct that, and it saves you money on your taxes. Now, it's important to remember that with what's called the $10,000 10K SALT cap, that's state and local taxes, you can only deduct the first 10,000 in state and local taxes. And so when you combine your state income tax, local taxes, mortgage interest, you might hit that cap relatively quickly. Not every dollar might actually be deductible, but at least in principle, one of the big advantages of the mortgage is the tax deductibility, which decreases the total cost there as well. Which one is the right thing? There is no right thing. If you, for lifestyle reasons, believe you only are going to be in your next place a year or two, other than in very hot markets at exactly the right time, you don't really want to only buy a place and keep it 2 years. The acquisition costs, particularly with a mortgage, and the cost to sell really add up. You can have, let's see if I can do this on the fly. So when you buy, you have your mortgage costs, which can be, $5,000 to $8,000. Title insurance, which, we could talk about whether it makes sense. That can be another, $3,000 to $7,000. You've got your moving costs, which can be $1,000 to $3,000. The first couple years, remember, your mortgage payments are overwhelmingly interest payments. If you are under 20% equity, you usually need to pay what's called private mortgage insurance. Then when you sell, your realtor is going to charge you 4 to 5%. You're going to have your moving fees again. Sometimes you have what are called transfer stamps or taxes. Okay, look at this handwriting. This is crazy. You have all these different things. The point is, rarely, unless the market is super, super hot, does it make sense to only own a place for 2 years. So how long do you want to be there? Is your family changing in such a way that you need one situation for now and another in a year or two? Could be you plan to get a pet, could be a kid. How stable is your job in terms of where you live? And how expensive is the market? There are markets where renting is relatively more expensive than buying for the same size square footage. And there are places where buying is relatively less expensive than renting based on the same square footage. Very dependent on your individual circumstances, but these are some of the things worth considering.